So we begin with our top story, the belief that where China goes, the rest of the world will follow.
The set of data is very encouraging.
Very encouraging.
Pretty encouraging.
Maybe that data is bouncing. I think China's forming a bumpy bottom.
Very close to Chinese economy bottoming out.
We do expect better data to come in the coming months.
Stronger economic data out of China for the rest of this year.
Further stability and actually further pickup in China.
China was a start with the PMIs that we saw on Sunday.
If China does stabilize and even improve a little bit, that'll help Europe. That'll certainly help the U.S.
We are hopeful that even U.S. data will get better and ultimately even Europe.
The story is mainly about China.
China has been the marginal force in terms of global growth.
To continue the conversation, joining me around the table is Ben Laidler, HSBC Global Equity Strategist, Matt Hornbach, Morgan Stanley's Head of Global Interest Rate Strategy, and Mike Swell, Goldman Sachs Asset Management Global Fixed Income Portfolio Head. So, Mike, let's begin with you. I want to talk about this market and the belief that where China goes, the rest of the world will follow. Is it a belief that you share?
Definitely. I think that China is kind of been the big variable for the global economy, and you've had it was one of the big scares that we saw in the fourth quarter of last year. There were others. I think that the view in the fourth quarter was that it could have an impact on leading the developed markets into recession. And clearly it was a short-term issue. And so if we look now, we look at today and we look at growth in China, it's going to be somewhere in the range. What's the range? The range set out by the government. And so I think that there are certain markets that have already kind of predicted the fact that China would resume its growth path. But I think that the emerging markets is an area where I still think you see a lot of value and a lot of concerns around China. And I think that if we do see stabilization there, I think the emerging markets could see a decent bump.
What do you think, Ben?
Yeah, China's 40% of global growth, right? It's more important than it's been a very, very long time. What's interesting is the level of bearishness that you've seen on China. So I actually think if China does stabilise here, as we think it continues to do so, I think markets still have room to move up on the back of that, just given if you look at consensus GDP numbers, consensus earnings expectations, positioning, I mean, they're all light. So I think this continues to be a pain trade. I mean, China's been the best performing equity market in the world year to date. I think that continues.
So they're the two judgment calls you've got to make on a morning like this morning. Does the Chinese economy continue to stabilise? Judgment call one. Judgment call two is whether the market has already got ahead of that story or not, and where you can unlock value. If we do get this Chinese growth story develop, if the rest of the world comes through, Matt Hornbach, do we get high Treasury yields?
Well, I think maybe a touch, but where we're really most focused on is the feed-through into Europe and the feed-through into German bond yields. To us, that's really the place that's most egregiously priced at this point in time, John. So, the way that we're recommending investors play that is to be overweight duration in the United States versus underweight duration in Europe. That, to us, is the best play here.